Good morning, traders. Manny Cabrera here from MDC Trading Academy with today's pre-market forecast for Monday, February the 28th. Let's quickly jump to our news items for this week as we do begin the week with a report at 9:45, the Chicago PMI. Careful. Try to be out of the market at least 10 minutes before the report comes out. Actually, the rest of the week is also full of really interesting reports. We do have an OPEC meeting. This may, in some sense, affect the market, anything that comes out of there, simply because of what's going on, obviously, with the oil supplies, the situation in Ukraine and Russia, so on and so forth. Manufacturing information. We do have the chairman speaking and testifying on Wednesday, so that's going to be a biggie at 10 a.m. in the morning. We have non-farm employment changes, unemployment claims, more testifying by the chairman on Wednesday and also on Thursday, and of course the unemployment rate. So tick down last. They're expecting it to tick down from previous. They're expecting a little tick down. Let's see what happens. Now, the markets, friends, the markets have been absolutely unbelievable. The movement, the amount of ranges that we're having. Look at our ATR is at 108. I don't remember having an ATR at 108 in a long time. Our average volume is 1.6 million. I mean, we're easily eclipsing 1.8, 1.9 on a daily basis. The ranges are absolutely humongous. We're working on our third recovery day after this low that we established on the 24th. We went way below the 200 SMA, and we're expecting the market to actually be between. This is an inside day between the maximum of Friday, the high, and the low of Friday. We found ourselves right in between that high and that low. Let's look at another time frame so you can start kind of putting together how the market is slowly but surely trying to recover from these lows. Here we go, and here we are again. This is the January 23rd low, which was the lowest swing low that we had all year long. Market recovers from it, gets back into this oscillating range here, and there is oscillating, and it clearly breaks below it. This is when the invasion actually happened. Market recovers quickly, holds support, and of course we were talking about these two particular areas on Friday. This is pretty much where the activity of the market is going to be happening with these 2 days. And the question was, does the market have enough volume, enough range to reach these areas within the same trading session? And of course it did, and look what happened. If I broke clearly above this area, it came right back into 2 tests of support, and then boom, the huge gap, and we're right back into this oscillating area here once again where we were previously. This is where we find ourselves right now with this huge gap. And of course, gaps are areas that markets tend to fill. It's just the nature of the market. Markets don't like to have those kinds of gaps. Let's look at what we're thinking about doing today in reference to the movement in the market. This is the intraday high of Friday versus the intraday low of Friday. There's how the market with a huge gap kind of consolidated here for a bit. Then it broke out and it's clearly within this upward range, holding support here. Of course, we're expecting the market, if the market holds here, we're expecting to oscillate right back into this range, potentially something like this during the day. If the market breaks below this, obviously we can expect the market to move a little lower. We can just do a fib from this particular high, current high, swing highs and lows. We still haven't really retraced, but if we come right back to this area here, this original resistance area from earlier, we can expect at least a 38% retracement, 38 to 50% the market can retrace here. But remember that the looming thing, technical elephant in the room, is actually this gap, which the market is going to potentially try to make its way to fill, which would be heading towards the intraday high of Friday. That's what our scenarios are today. Make sure you place your stops, watch the deep ranges, adjust your stops, place them in a good place, and just be patient with this market. Do not force it. Do not fall in love with either side. Play what you see in front of you in the immediate term. Take care. Have a great session.